There are only three things that matter for the price development of Bitcoin and Ethereum. First of all, that's tokenomics, as in how quickly does new supply enter the market. Secondly, that's the long-term holders. How quickly does the new supply get absorbed by the people that tend to never sell? And thirdly, that's Wall Street. How much supply gets absorbed by the ETFs? How much supply gets absorbed by the treasury companies? Now in this video, we are going to make a deep dive on those factors and we compare directly Bitcoin versus Ethereum to try to get an understanding what's likely going to outperform in the next years. Let's start off with the easy part, the known part, and that's the inflation of Bitcoin. Every 4 years, the newly issued supply of Bitcoin gets cut in half. Currently, we are at 0.8% annual inflation. So the Bitcoin ecosystem has to grow by at least 0.8% for the price to appreciate even against the monetary debasement. Now this will get cut down in May of 2028, so less than 2 years, and Bitcoin will become a harder and harder money going forward. Now here's a fact that's surprising for some. The tokenomics, at least right now for Ethereum, are not that different. Ethereum has an inflation rate of 0.85%, very comparable to what we've got with Bitcoin. It's noteworthy that both of those inflation rates are much lower compared to the inflation rate of fiat currency. The US money supply, USM2, tends to grow by roughly 6.8% per annum. So if you've got something that doesn't grow at that rate, very long term, it should go up, measured in US dollars. That's the fundamental thesis. This is why Bitcoin got created in the first place, just to be a harder money and to protect against the devaluation of our purchasing power. That's what happened during the global financial crisis, right, when Bitcoin was launched. But yeah, the inflation rate of Ethereum and the inflation rate of Bitcoin is now pretty much the same. Let's see what happens once we get the halving in Bitcoin. Maybe Ethereum will update its tokenomics as well and reduce its inflation rate as well. There are already first discussions how to improve the situation for Ethereum. So for one of the three factors, the token inflation, it seems like it's very comparable between Bitcoin and Ethereum. What about the other two factors though? What about the long-term holders? Now check this out. This is the Bitcoin HODL waves. This shows the BTC that haven't moved for a long time. So over here, we've got all the Bitcoin that has not moved for at least 5 years. This tends to go up very steadily. The periods where those kind of Bitcoin suddenly get net reactivated again are very short, and there's only a small fraction of the supply that suddenly re-enters again. For long term, the trend is clear. Bitcoin becomes tighter and tighter in its supply. And when we zoom in a little bit, we can see it's now close to 34% of the circulating supply of Bitcoin. It's likely never going to re-enter circulation again. And that's, of course, increasing over time. This is, by the way, already including Bitcoin's inflation, right? This is as a percent of all of supply, not as the number of Bitcoin that haven't moved. Now for Ethereum, we've got something comparable. We've got the staking mechanism. How much of ETH is held for the long term is getting buried in a protocol to earn the benefits of additional token inflation. Isn't it surprising how this is also close to 34%? So when we take those two slightly different measures, but we compare the long-term holders, the percent of long-term holders tends to increase over time, and it also tends to be at a similar level, both for Bitcoin and Ethereum. While the fundamentals of Bitcoin and Ethereum are completely different, right? Bitcoin being just the hardest of the money with very little functionality, Ethereum being programmable money, not necessarily as decentralized, but also with its own use case. While the two assets are very, very different, when we look at the numbers behind them in terms of demand and supply, so far, they're very comparable. And maybe that's one of the reasons why the prices tend to move in similar directions at the same time. Because in the end, price is just a result of demand and supply. It's not a result of the technology. It's not a result of anything else. It's just demand versus supply. And if new technological developments don't change that ratio, then the price will just stay flat. Now let's have a look at Wall Street, specifically the treasury companies and the ETFs. Here we've got MicroStrategy, or now just known as Strategy by Michael Saylor. That company holds 4% of Bitcoin supply. And in the last weeks, it has stopped acquiring more Bitcoin. It rather sold a little bit, but it's barely visible on this chart. So 4% held by the largest treasury company for BTC. Here we've got the Bitmine, that's the equivalent by Tom Lee for Ethereum. He's holding 4.58%. Isn't it surprising how close those numbers are? Now, clearly, the ratio between Bitcoin and Ethereum is not stable at all. It fluctuates quite a bit. So what could drive that fluctuation? It could be retail, but it could also be the ETFs. So the second part of Wall Street. Not the treasury companies, but the ETFs. And the data here is very interesting. Have a look at the top chart first. In orange, we see the percent of Bitcoin supply that's held by the US spot ETFs. It's currently 3.3%. In blue, we see the percent of Ethereum supply that's held by the ETH ETFs. It's a bit less. It's 2.6%. Still, the numbers are surprisingly close. At the bottom, we see how the prices have developed over that time. So they tend to move in the same direction. At the same time, Bitcoin slightly outperformed since July of 2024. Now, there were times when the Ethereum ETFs bought much quicker than the Bitcoin ETFs, relatively speaking, to its circulating supply. And I wanted to figure out how much of an impact does that have? When the Ethereum ETF gets bought at a quicker rate for its market, does that mean that Ethereum outperforms as well? And that's answered in this chart here. So what we see as this bar chart in the background, that's monthly data. Is in a given month the Bitcoin ETF acquiring more Bitcoin relative to its circulating supply, or is Ethereum bought more relative to its circulating supply? So how much percentage points get acquired on a given month for Bitcoin versus Ethereum relative to each asset's circulating supply? And we can see when there's a lot of Ethereum accumulation, that then Bitcoin relative to ETH tends to underperform. When there's more Bitcoin accumulation, so in this case 0.2, 0.3% of Bitcoin circulating supply got bought in excess of how quickly Ethereum supply got purchased, then Bitcoin outperforms. In the last 2 months, we have seen more Ethereum acquisition than Bitcoin acquisition. This could be because of 2 reasons, right? It could be just quick purchases of the Ethereum ETF, but it could also just be sales from the Bitcoin ETF. And effectively, we see sales from both directions. Just with Ethereum recently, we had a bit of purchases that we didn't see in BTC. That's why we now have, relatively speaking, more Ethereum purchases. That's then leading to Bitcoin underperforming. So it seems like the ETFs are driving much more than one might expect. They only hold around 3% of each asset's supply, but they seem to be the driver of what happens, at least in the medium term. In the long term, it's of course tokenomics and its monetary devaluation, and it's the diamond hands that make the price development. But in the short to medium term, the most liquid supply is on the ETFs, and the delta between what's happening on Bitcoin versus ETH actually does have an impact on the relative pricing. Here is Bitcoin's price relative to Ethereum's price long term. The dotted line, that's a very long term ratio. So Bitcoin over the years tended to be roughly 29 times more expensive than ETH. If this trend here continues and there will be more purchases of the Ethereum ETF relative to its supply compared to the Bitcoin ETF relative to its supply, then BTC relative to ETH should rather fall. And the equilibrium price also suggests that, right? A potential fall of roughly 18% from here. Now, this is very short term. This is very speculative, but I just wanted to present the data. This seems to be a logical conclusion. By the way, I've made a dedicated cheat sheet regarding how to get in and out of various markets, how trying to fish for the perfect bottom or the perfect top is very problematic, and what we can do instead. You can get that cheat sheet completely for free, either by scanning this QR code in your phone. That will open the Telegram app. You can also click over here on this button. The website is in the link comments. Again, that's for Telegram. You can also plug in your email address. Then you will get that PDF sent to your email. 100% free, no payment required, no credit card required. Feel free to check it out. If it's your first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time. Cheers.